the global container business is in chaos.
It's a pandemic-induced buying surge that we have never seen before.
We are trying to deal with a surge in demand, which is completely unprecedented. Both a surge in demand because the consumers are spending, but also a surge in demand as large retailers actually stop buying stuff in Asia in the second quarter of 2020 and well into the summer.
Maersk, the world's largest container shipper, has seen both higher volumes and record profits. The Danish shipping firm, whose customers include Walmart and Nike, announced May 2021 first quarter revenue of $12.4 billion, a 30% increase from a year earlier.
It is both a demand and a supply crisis at the moment. It's tighter now than it's ever been, and it's not looking to loosen up anytime soon. And there's really no quick fixes to this.
And it's not just pandemic-era shopping, saturated ports, and COVID-related shutdowns that have impacted ocean carriers in recent years. Ships have also gotten bigger and place an even heavier burden on terminals and workers.
When I say go to battle, we have a job to do. Sometimes ships come in, I couldn't tell you how many containers, maybe 10,000, maybe 15,000 containers on the ship.
Maersk has a fleet of over 700 ships and handles 1 in every 5 containers shipped by sea. The company also owns terminals around the world and has a growing land-based logistics business. On average, a Maersk container ship calls on a port somewhere around the globe every 6 minutes. Like its competitors, the company has faced a series of obstacles ranging from the worldwide shortage of shipping containers to the blockage of the Suez Canal. So with vaccine rollouts in place in the US and consumer discretionary spending shifting towards services, will Maersk and its rivals be able to maintain their momentum? And what do bottlenecks at ports and higher freight rates mean for US consumers? The pandemic has caused havoc for the global supply chain.
The market is in turmoil right now, but not because anybody did anything wrong. Everybody did actually what they were supposed to do.
The problem started in Asia. In early 2020, China, home to 7 of the 10 largest container ports in the world, shut down for 2 months, causing exports to plummet. Facing a sharp drop in demand, ocean carriers slashed their operations. Maersk canceled sailings, increasing its idle ships by almost 10%, the highest number in 10 years.
That makes sense. If there's no cargo to move, you obviously don't sail the ship either.
We saw unprecedented levels of contraction in container demand. We saw, globally speaking, 15 to 20% of container demand simply just evaporated as everybody on the demand side of things, the destination countries in North America and Europe basically cut their spending way back.
But with consumers stuck at home with little to do, that drop in demand quickly reversed course as Americans pivoted to upgrading their living rooms, backyards, home offices, and home gyms.
Apparently, the US consumer got bored sitting at home and found out, let me just buy oodles of stuff online.
The surge in demand coincided with a series of other complications for the industry too. One problem for the carriers was the shortage of containers where they were needed most, in Asia.
So the US demand boom starts at a point in time where I am no longer replenishing my inventories of empty containers. That's why when you then get into autumn, you run out of empty containers in China.
Canceled sailings at the start of the pandemic led to stockpiles of empty containers in Europe and elsewhere.
That causes freight rates to increase extremely rapidly.
Freight rates at Maersk increased 18% during the second half of 2020. Around the same time, ports were facing problems of their own, including surging demand, congestion, and COVID outbreaks. In January 2021, more than 40 cargo ships were stacked up outside of the ports of Los Angeles and Long Beach.
And even under normal market circumstances, handling 30% more cargo through a port, that is highly challenging because it's not enough to get the containers off the ships into the port. You also need 30% more trucks to drive into the port to pick it up and get it to the rail and so on and so forth. But to make matters worse, this happens at the same point in time where a sizable proportion of the port workers contract COVID.
By February 2021, containerized shipping rates to the West were up 30% from a year earlier. Shipping rates to the East Coast from Asia were up as much as 5 times during the same period. The Port of New York and New Jersey is home to the East Coast's busiest port, and the region is one of the world's most concentrated consumer markets. Maersk's APM terminal is one of 6 terminals which operates at the port and serves roughly 13 to 15 ships a week.
We never know what's going to happen when you wake up in the morning. There could be a snowstorm, or there could be heavy rain, there could be winds.
While the facility experienced a drop in volume at the start of the pandemic, stay-at-home shoppers led to a brisk rebound in terminal activity. By the end of 2020, APM's volume surged nearly 25% over the previous year's levels.
We didn't miss a beat. We had to go to work. Critical cargo was coming in for all the healthcare workers, and actually all cargo was needed in the entire region.
And it's not just pandemic-era shopping that has caused port traffic to surge. In recent years, container ships have experienced their own massive growth.
Today, what you'll see out there is our Maersk Guthorm. That's a ship that's sailing on the TP12. We'll start her with 6 gangs. That means there'll be 6 cranes working on her. Probably be about 3,000 moves, and she will be expected to sail Friday morning, probably about 1 o'clock. So a day and a half, sometimes 2 days to unload these large ships.
The modern era of containerized shipping got its start at the port of Newark, New Jersey in 1956, when the first containerized ship sailed to the port of Houston, Texas, carrying 58 8x8-foot containers. Since then, shipping containers have become the backbone of the global economy.
I think that, say the whole boom that we've had in, consumer goods shipments has been possible because of the container ship.
Maersk got its start in containers in 1975. And by 2013 was sailing what was then the largest ship in the world, the Maersk McKinney Muller, with a capacity of more than 18,000 20-foot containers. The ship stands at 1,312 feet long, roughly the size of the Empire State Building. According to international shippers, a 20-foot storage container can hold more than 14,000 bottles of wine, about 100 washing machines, or about 48,000 bananas. Ramon is a longshoreman crane operator whose job is to offload containers from the giant vessels.
Right now, we're discharging the ship. We started out with 134 boxes here. We're going to clear the entire deck.
There is not enough capacity in the world right now. Every conceivable ship that can sail is already sailing. So every time there is a vessel that suffers for that minor engine malfunction, there is no replacement vessel to be found. It's just not possible.
Imports to Port Elizabeth include consumer household goods like furniture and clothing. Exports can be anything from agricultural goods to waste paper. Because of the trade imbalance, containers are often shipped back to Asia empty.
We're moving a lot of empty containers from this terminal, so a lot of choice New Jersey air is being sent away from here to other locations.
And even the cargo that moves on the backhaul out of, for example, North America is not fully paying for its own way, because it's a lot of scrap metal, used to be a lot of waste paper, and very low value goods.
In April 2021, the port of Newark and New Jersey's cargo volume set a new record, the 9th month in a row, at 18% above pre-COVID levels. And according to workers on the front line, the pace of cargo is unlikely to diminish anytime soon.
The ships are getting bigger, the workload is getting bigger, they're hiring more labor, more trained, skilled labor, but as the future goes, I'm sure the ships are going to even get bigger than they are now.
Container shipping is often unpredictable and dangerous work that can involve everything from engine failures to typhoons. In a January 2021 voyage from China to LA, the Maersk Essen lost 750 containers overboard in bad weather. 2 months later, the Ever Given, one of the world's largest container ships, became wedged in Egypt's Suez Canal, suspending traffic for almost a week. The Suez Canal handles about 12% of global trade. Then in June, surging COVID cases in southern China caused massive delays at ports there. But it was consumer spending and higher freight rates that might have had the largest impact on the world's biggest shipping container companies, including Swiss-based Mediterranean Shipping Company, French-based CMA, CGM, Costco Shipping Lines out of China, and of course, Maersk. According to consulting group Sea Intelligence, the 11 largest shipping container companies saw a record $13.3 billion in operating profits in the second half of 2020.
Cargo owners right now getting the worst ever service at the absolute ever highest prices seen, which of course is not going to be fun trying to explain to your boss if you're the logistics chief at some big importer why suddenly the department we never cared about is about to bankrupt us.
Maersk had some of the biggest gains. In the first quarter of 2021, revenue rose 30% to $12.4 billion from the year prior, driven by a 31% increase in its ocean business. Maersk reported 2020 revenue of $39.7 billion. Its ocean business, which includes transporting containers, had revenue of $29 billion. Its land-based logistics and services business had revenue of $6.9 billion. Its terminals and towage, which includes port activities and offshore towing, had sales of $3.8 billion. And its manufacturing, which includes making refrigerated containers, had revenue of $1.2 billion. The company also reported $1.4 billion in unallocated activities and eliminations. While container shipping, which accounted for 73% of 2020 revenue, will continue to be a focus for the company, its pivot to land-based services like warehouses and last-mile delivery could be the company's growth engine in the years to come. In the first quarter of 2021, Maersk's logistics and services business jumped 42% from the year earlier.
We really see that logistics is not just only ocean shipping. The customer is only happy when they get the things, from production line until the store, essentially.
The caveat here is it's not the first time a container line is trying it. It's not the first time Maersk is doing this.
Being able to offer your customers an end-to-end solution, both on sea and on land and in air, really could put Maersk ahead of the pack. Looking at their strategy, they think they are on the right path, but they are facing some large challenges. One of them being that a lot of their customers are also providing these solutions. So they could end up in a situation where their customers are also their competitors.
Maersk is also making moves to reduce its carbon footprint. The Danish firm announced it would launch a carbon-neutral vessel by 2023, 7 years ahead of schedule. But what does the chaos in shipping and higher freight rates mean for consumers?
So you have this extremely interesting situation where, as a consumer, you are not going to be majorly affected by this. As a company, this might actually be life-threatening depending on what it is you're shipping.
According to a June 2021 analysis of spot rates by Sea Intelligence, higher freight rates could be an existential threat to cargo owners shipping large, bulky items. The study said freight accounts for up to 27% of the retail value for small appliances, 41% for large appliances, and up to 62% for assembled furniture. One note, cargo owners with long-term contracts in place will see freight rates lower than the current spot rates, but still higher than a year ago.
Before anybody thinks this is catastrophic, we can't move any cargo around the world, supermarket shelves are going to run empty. No, that's not the case. What the case is, most cargo in the world can still move. It is much more expensive to make it move, but it can still move. But there's a tiny proportion of the cargo that will not move. Now, if I'm a container line, this is fantastic. They've never been as profitable as they are now. I'm sure that is not how they would phrase it. They would probably be very sorry about this poor service level they give to their customers, but they're more profitable than ever before.